All right, everyone. Welcome once again to the Faces of Business. I am your host, Damon Postolka, and I am excited for our guest today because we have none other than Tom Herman from Veda Intell with us here today. And we are going to be talking about commercial due diligence for M&A transactions. Tom, thanks for being here today.
Thank you for having me, Damon. Appreciate it.
It's going to be fun. Going to be fun, my friend. So, Tom, like we always do, let's start off by learning a bit about you and how you started your path and ended up doing commercial due diligence for M&A transactions.
Yep. Going way back to college, I happened into this course called Economic Geography, which kind of brought everything, business and kind of climate and culture and all these different aspects of kind of the world together to kind of explain, why things happen the way they happen in the business world. And I just got fascinated with business. And, I was at that point an environmental science major. So I kind of changed gears and then got into, market research and consumer research. And that's kind of really what launched me on the path. And my first job right out of grad school was working for a publicly traded retailer, a drugstore retailer, and was part of their initial market research department that they started up, which was started because they had a big issue. They entered a market in southern Pennsylvania and they opened a whole bunch of stores without doing any real diligence at all.
Ooh.
They didn't understand the competition, the consumer habits, and they didn't really know what they're getting into. And ending up having to close, over a dozen stores and took a bath. And it was, bad situation. So they decided they needed to get a lot smarter in their process in terms of evaluating markets and locations. And so my first job was, kind of figuring out where to put stores, what markets to enter,
Wow.
How to position the company for success, as it was growing. And we ended up opening a ton of stores, really good track record with the group that we, the real estate group and the research group working together. And that was kind of the start of my career. And ever since then, everything I've done has been to support either investment decisions or disposition strategies. So it's market research and due diligence to support, people that make deals or, people that kind of put their money on the line. So it's really all about reducing risk and identifying opportunities.
Yes. So it's interesting because people walking through business don't normally think about commercial due diligence for an M&A transaction. People have heard of due diligence probably because it's common. The buyer goes in, they're going to look at the company, but explain what commercial due diligence is and how that differs from maybe some of the other more traditional financial diligence or operational diligence that a buyer or a seller of a company may work on.
Yep. So commercial due diligence really addresses the customer and the market. The financial due diligence, which is a critical piece, looks at the finances. That typically is looking at what's currently happening and what has happened. Commercial due diligence looks more at what's happening now and what is likely to happen in the future. So that's the big difference. And there's all sorts of other types of due diligence that are important, IT and operations and, HR. And, there's a lot goes into making a significant investment decision, but our focus is strictly commercial, customer and market. So it's all about understanding, when you buy a company, you're buying a customer base basically, and it has previously provided revenues to the company that you can look at through a QV just to see where the company stands in terms of EBITDA and all that. But what you don't know going into a deal is what the customer base is going to do going forward. You're hoping that it continues to deliver revenues such that your valuation that you put on it is appropriate, and hopefully, you can build on that. But, without a customer due diligence study, you're really kind of taking a risk that, the customer base will stick around. They'll continue to, patronize the company and hopefully grow. Yeah. Same with the market. If you're buying into a company in a marketplace that might be undergoing changes, or the company you're buying isn't positioned very well competitively to compete going forward, those are all things you need to know going into it so that you can either avoid an issue, price the deal right, or at least be prepared to make changes immediately upon acquisition.
Yeah. Wow. There was a lot there. You said it quickly. I was trying to write some notes here because I think, first of all, let's back up a little bit and talk about. So we're talking about that commercial due diligence, about the customer and the market around a business. So who typically is going to benefit from this service?
Well, I mean, pretty much, if you're a buyer, you want to make sure you're understanding what you're buying.
Okay.
If you're a seller, you want to make sure you're positioning your company in the best possible way to attract, the most number of bidders or interested parties and to drive the value that you're looking for. So, the way we look at it is it's important on both sides of the table. Really both sides should be doing, customer and market due diligence. The approaches are a little different. On the buy side, it's a little bit more defensive. You're trying to identify risks and also opportunities.
Mm-hmm.
On the sell side, it's more proactive. You're trying to position your company in the right possible way, and it's really all about telling, a value story, explaining why your company is positioned well to continue to be successful, and show it in the best possible light going forward. So, I really, we do work on both sides of the table. So, we know what buyers are looking for and what they're going to scrutinize, so that we can help sellers be prepared. We always say that you want to deal from a position of strength. So on the sell side, you want to make sure you've addressed all the common things that buyers are going to key in on, so that you don't have to be reactive. You're more proactive in presenting the information without them even having to ask for it.
Yeah, that's a great point. So how many times do you get contacted by a seller, or has it happened where a seller gets into a process and they go, wow, I just don't even know what they're asking for here, and we need some help putting it together?
Yeah, that happens a lot. We were working with a manufacturer who was selling a division, and it was a successful division doing well, but they really couldn't explain where their company sat in the marketplace. They didn't know what their market share was. They really didn't understand, there was some changes happening in the market, in terms of new technology and possibly some new market entrants from overseas. And so they really didn't understand exactly how to present the opportunity to the marketplace. So we were brought in to kind of figure all that out and kind of lay out a value story that explains where the company has been, where they are today, and how they're going to position themselves for the future.
Yeah. So when you're doing that, what are some of the things? I mean, because even at a small deal level, buyers are interested in this. They're asking these questions. So what are some of the main things, if I'm a seller and I want to think about how to present my value, what are some of the things that you typically will uncover in your commercial due diligence on a sell side assignment?
So every company is different. So what we like to do on the sell side is start with an assessment, kind of look at all the aspects of the company, the kind of outward facing aspects of the company. So, we do an assessment of its customer base, identify any concentration issues that'll automatically be an issue.
Yeah. That's a big one.
That's a big one. And then also, understand customer satisfaction and customer, we call it customer stability, like how sticky is your customer base going forward.
Yeah.
That's important to assess. But also, we just look at everything that the company presents, its website, its messaging, its competitive positioning, its differentiation, how they explain that. We try to identify how strong their story currently is to the marketplace. And ideally, we're engaged early enough so that we can actually identify areas that can be cleaned up and improved prior to going to market. Once you're in the market, it is what it is, and there's not much you can do.
Yeah.
But if you start preparing a year or more in advance, there's a lot you can do to improve the look and feel of the company prior to actually hitting the market. So the assessment is important to understand, where's the low hanging fruit that you can clean up, quickly and cost effectively to improve, the market's perception of the company. So that's a big one. That's a great place to start.
Yes. So in those situations, do you often get people to come to you early on and do it, or is it more? Is it you typically don't have enough time to really do what you want to do?
Both.
Yeah.
It's there's some advisors we work with that are really on board with the concept of really creating value for their
Mhm.
client before going to market, and obviously we love them. A lot of times it's pretty tight, and there's not a whole lot you can do. I mean, you can clean up a website literally in a couple of weeks.
Yeah.
You can address messaging and differentiation a little bit. There's a bunch you can do with short time frames, but obviously you can do a lot more with more time. Especially like customer concentration. If you identify that early enough, there are steps you can take to
Yeah.
to deal with that. And then also, if you can't, obviously some companies have really long-term clients that are a big portion of their business. In those cases, you may not be able to diversify in time, but what you can do is quantify the strength of that relationship using one-on-one interviews, satisfaction surveys,
Yeah.
and things to really lay out the strength of that relationship, such that the buyer will see that, all right, this isn't just a customer, it's like a strategic partner effectively. And
Yeah.
if you can deal with the concentration issue in that way, you can oftentimes get past it.
That is a great point, and a step that not many people would understand how to really quantify, like you said, is the strength of a relationship with your largest customers, because that would be a huge thing to help overcome a concentration issue.
Right. Yeah. And to understand, we kind of do a customer like relationship mapping exercise where we look at every touch point between the company and the customer and talk to each of those people that interact with the company and just document, satisfaction levels and how the relationship works. And it tells a great story that gives a buyer a lot of confidence that, okay, this isn't just, the owner of the company and the customer golf buddies. And as soon as
Yeah.
the company sells, the client's gone. And if you can spell out exactly how that relationship works and how well it works,
Hmm.
that goes a long way.
Yeah. So what are some of the things that you're going to be looking at in some of these in these situations that people might not even think about?
Hmm.
Or typically think about?
Well, it seems like a lot of people aren't thinking about a lot of this stuff, but you know, just kind of mapping out, the strength of the customer base.
That's a big one. You
That's
know,
yeah. That to me, that's the biggest one because everyone knows you're counting on your customers for revenue and to
yeah,
understand how well you're satisfying your customers and how and why they choose you, over other options. And a lot of companies will do a Q of E, primarily on the buy side. They'll do a Q of E, but also some proactive sellers will do a sell side Q of E, and they look at the financial aspects of the deal. But what they don't often do is add in the kind of forward looking customer and market aspects. So you can spend a lot of money on a Q of E, as you know,
yeah,
um, but you can spend a little bit more and add in the dimension of customer and market to understand what's the future look like. I mean, it's great to understand the current state of the financial position of the company, where it's been and where it is now. But what are the what kind of security do you have going forward? Like without
yeah,
understanding the customer situation, it's kind of adds a level of risk there that you're kind of hoping
yeah.
that everything continues. So
Well, and you make a great point here, and you said it, and probably didn't even know it because you talk about it a lot. Is what does the future look like? And that's really the bet that people want, or the question that buyers and sellers want to answer, because if they can predict that and say this is what it's going to look like, even better than the next person or better than they could yesterday, to be able to really give it some depth, that's a huge thing.
right, yes. I mean, if you think about it, if you're a buyer and the seller presents to you their financials, but they also present to you, a full report on their customer base in terms of satisfaction and transcripts and summaries of one-on-one interviews, and to show that the customers are satisfied, they're loyal,
Yeah.
they're continuing to spend. You lay all that out, the buyer's going to be like, all right, well, this is great, this looks really promising. So but a lot of deals don't have that information presented on the front end.
Yes.
So
Yes.
it's definitely better to be proactive and offer that up than have the buyer request access to the customers late in the process and do their own work, and maybe they confirm it or maybe they don't, and then you're kind of not dealing from a position of strength.
That's true, because if a buyer is coming to do it, and let's talk about that, because we've been talking about the seller talking about the commercial due diligence for these M&A transactions, but when a buyer comes into it, are they just trying to make a good purchase?
For sure, they're trying to avoid risk and trying not to overpay. So one of the big things that buyers will do is try to, really shrewd buyers will try to validate sales projections that the seller is presenting. So in the best way to do that is to actually call on those clients that that they're saying are going to continue to provide revenue or even grow, and we actually call under the guise of a customer satisfaction survey, that sort of thing. So it's totally third party, and there's no mention of a transaction, of course.
Yeah.
And we just talk with them about their satisfaction and their future plans to continue spending or increase their spending, or buy a new product, whatever new product the company's introducing, whatever it happens to be, and we can validate whether what the seller is saying is actually true. And we've had situations where sellers have presented significant increases to revenue projections, and we've done work to question that, and we found that what they've said is not exactly what the customers are saying. So and that obviously comes back into the valuation and the negotiation and all of that. So, but I mean, if you're the buyer, you want to know. I mean, you don't want to just take the seller's projections at face value. That's not really.
Well, yeah, I mean, because you're talking about millions of dollars on the line. You're talking about, it could be many different things that are going to be a problem, and it's really a challenging situation when you just can't make a mistake at that point, because there's very few ways to get out of it, or come out of it the wrong way, especially if you overpay significantly. So I think that sometimes when people are selling a business, even people that have done it before, they really haven't put themselves in the shoes of the person buying the business or the group that's buying the business, and go, okay, our reputation, our investors' money, our future oftentimes is on the line if we do this wrong. So we need to make sure we do it right.
Yeah, for sure. And on both the sell and the buy side, it's always good to identify additional opportunities that the company might not be pursuing right now, but show them as opportunities for future growth. And that's great to do on the sell side, be proactive and show them that other market segments or markets that can be entered or whatever that can increase the company's, trajectory going forward. And on the buy side as well, you want to look at, how's the company doing now, and what's the customer base look like, and is the market stable? Is it growing? Are there threats coming into the marketplace we need to be aware of? But then also, what are opportunities for us to grow this business beyond what the company existing is doing? And that's the other thing that we do. That's that's a real value add to especially for a buyer going into an acquisition, to know, okay, the company's in good shape, and here's what our 100-day plan is going to be based on these opportunities that we want to start to pursue.
Yeah, because uncovering those opportunities as a buyer or as a seller is huge. Both sides.
Yep.
Both sides. Especially even if you're sitting as a buyer, it's a big deal. Especially because if you have that information, it's not something that you have to tell anyone.
Right.
And certainly it shouldn't affect the value of the business that much today, because if it would, the current owner should be realizing some of that value already and heading down that path. But it is such a big deal to be able to uncover that stuff as a buyer, to find those new opportunities that might not be there now.
Yeah, absolutely. Yeah, and like you said, you don't have to let anyone know that, that you've spotted them, but a lot of buyers, that are adding on to an existing platform, they know what their plan is for the business in terms of how they're going to direct the business. But yeah, it's good to have a plan.
Yeah. Well, and the other thing I was thinking about too, as you were mentioning that, is the fact that a buyer, especially an investment buyer, is going to look at different opportunities with much different lenses than the current owners may. Because if you have a longtime owner of a business or family owner or even another group that is nearing the end of their time with that business, their additional investment in that business may be limited, or they may not have a real appetite to do that. But the new buyer may look at the same business with the same opportunities that everybody knows are there and go, we want to invest the money and take that opportunity. But even though they passed it by.
Yeah, you're exactly right. Depending on where they are in their business life cycle and where the owner is, there could be opportunities that are just sitting there that they just don't have the attention span or the the desire to pursue them. Yeah.
Mm-hmm.
Yep.
Yeah.
But they can be presented on the sell side as just like ready to go. Here you go. Yep.
Yeah, that adds to that, and that would, on both sides, it's a good thing if you identify them either way, because it's something that could add to the value for the buyer later, it could add to the seller today, or just get a deal done faster, or with a little better terms. I mean, because in reality, the thing that I think is really cool about doing the kind of work that you do, or work around an M&A transaction, is that the stakes are so high that the investment in the work that you're doing, even when you look at even like a quality of earnings, QOE, people talk about those a lot. I mean, you can easily spend, even on a smaller business, spend $50,000 on one. Mm-hmm. But it can be the difference between you getting the deal done for $25 million or not. And so you look at the return on your investment, it's a go, no-go decision on a lot of these things. Or in the case of, even in that situation, just say it reduced the sale price or the offer price by $2 million. If you didn't do it, or you did it,
right,
and you spent $50,000, would you spend $50,000 to get $2 million?
Yeah,
I think so.
Yeah, that's what we always say. You can spend 5 figures to save 7 figures. I mean, that's a good trade.
Yes, it is, and that's when business people that own these businesses, that see these kind of things at the end, they often don't, unless they've been through the process and understand it. Investment buyers know, because they'll invest in this stuff day in and day out, because they see the value that it brings to these transactions. It's interesting that this is one of those times when it's not like buying a piece of equipment and I can do $1 million more business and my margin is 35%. I make $350,000. It's just the opposite of that.
Right.
I might spend $350,000 and get millions back. So.
Yep.
Off here today. There we go. Got it back. So as we're looking at some of these things, we talked about customer concentration, and that's a big one. Now, when you're doing these and you're trying to project what's going out into the future, you're looking at current customers, you're looking at overall industry. What are some of the things that you're really trying to put into this crystal ball to give them an idea what's going to happen?
Yeah, I think customer satisfactions are a really great measure. If a customer base is satisfied, they feel like they're getting value that they're bargaining for, and the service is good, and there's no real red flags. That's the biggest one. I mean, really, if you're taking care of your customers, that's a great sign. And also at the same time, and we've had this happen where working on the sell side, doing a proactive customer study, identifying issues, and if you can identify those issues ahead of time, you can do something about them. and you'll want to do that because you won't want the buyer to find those issues out at the, kind of toward the end of the thing. So,
well, yeah. And if this is one of the things too, that it's why we preach about diligence preparation and normal. I'm not talking about commercial due diligence like you're doing, but diligence preparation, making sure all the numbers are right, making sure that you've got everything put together, making sure that it's well organized so that people can find things easily, making sure just all that, like you're saying, if a buyer comes down to a point and they say, well, can you get this? And you give it to them and it's not right. There is nothing worse than that, because it's like, aha, what else is wrong now? And
yeah, exactly.
That just opens a little crack to go in and really do a deep dive into something that maybe there's nothing there, but you're going to waste a lot of time and put a lot of doubt in that buyer's mind.
Yeah, we say the exact same thing. That is, if a buyer sees one little thing, they're going to assume there's 10 more. And
that's a good way to say it.
They're just going to keep going. Yeah. So the more you can address up front and be bulletproof going into the process, you will really benefit from that.
Yeah.
So proactivity is the key on the sell side for sure.
Yep. What are some of the most interesting things that you've learned while you're doing this commercial due diligence? Like, you were out researching this, and not mention any names, but what were some of the things you got? Wow, I never knew that, or I wouldn't have expected we would figure that out.
Yeah. So we talk to people, but part of our process is it's called human intelligence gathering. So, if we're working in an industry, we're industry agnostic. So we work in different industries all across the board.
Yeah.
And our team, we have, industry experts that we bring in to deal with certain things, like if it's a medical device or something. And part of what we do is not just interview customers, but we'll interview people that actually use the company's product, whether that's, an engineering company or a doctor or a nurse specialist or something. And we find out very interesting information from talking to these human intelligence sources, if you will. So that's where the most interesting stuff comes from, stuff that you can't find out anywhere else other than the people that are actually using the products day to day.
Yeah. That would be a great source of information for sure, because even your customers, if you're selling to distributors, they might not know, but until you really talk to the person that's got it in their hands, because a lot of this stuff, honestly, if you talk to a customer, it could be the hospital chain or the buying group that's buying it for the hospital, if we're talking about medical devices, and they've never even seen it. They don't even know what you're talking about. All they could tell you is, yeah, they delivered it like we wanted on time, blah, 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 blah. But you go into the hands of the people that use it, the nurses, the doctors, and whoever else, they're going to tell you exactly how much they like it.
Right. And they'll tell you things like, oh yeah, we were approached by another rep that sells this competitive product and we're thinking about it, So, I mean, you find out a lot of information that, people love to talk, like.
Yes. Yes. Oh, that's cool. That's cool. So what have you learned about this that's been changing over the years that really is interesting and exciting to you? What's changing with commercial due diligence?
It sounds kind of strange, but not a whole lot. I mean, what we do, I tell people it's not rocket science. It's just doing, getting your, self into the process of understanding what's happening. It's really, technology, AI has helped a little bit in terms of, we do a lot of one-on-one interviews, and they're videotaped and audio recorded and all that. And AI helps us summarize those and process those quicker. So it's helped us be more efficient. But other than that, this isn't rocket science. It's just doing the hard work of talking to people and analyzing data, and it's just someone has to do it. And most M&A advisors don't have a commercial due diligence function because it just isn't practical to staff that. And so, and they may do some high level stuff internally, but most don't have the capabilities and the bandwidth to do what we do. So it's not technically crazy stuff. It's just doing the work and not overlooking anything, uncovering every rock and trying to understand and explain what's happening.
Yes. So I was going to look at one thing here real quick, because just a new question came in my head. So in this, now you've been in research for a long time,
Yep.
research and helping this stuff. So what are some of the changing demands you see from the customers that were different? Because the things they're asking you to find out, are those much different, or is that pretty much staying the same too?
Yeah, it's pretty much staying the same. I mean, the questions that we're trying to answer are pretty,
Okay.
pretty standard over time. It's really, what are the customers going to do going forward, and
Yeah.
in asking them their purchase intentions, and obviously you can't take it for absolute fact, but
Oh yeah.
you have to ask the questions and understand why they are answering them the way they are. If they're satisfied,
Yeah.
then there's a good chance that their purchase intentions are going to be pretty accurate going forward. Unless something changes with, that's the other thing. If you can ask all the right questions, if the new ownership group doesn't, or changes things or doesn't follow
Yeah.
through, and then all bets are off at that
Yeah.
point.
Yeah. Yeah. It's such an interesting thing because it's not something that a business person that isn't involved in M&A transactions would think about. But as we're talking about it, if you're buying a business or selling a business, it is something that would be very valuable to understand that customer base better and uncover opportunities no matter what side you are on, because it all creates more value for that business long term.
Right. Yeah, absolutely. I mean, you need to know what you're buying, and you need to know what the potential is of what you're buying. So,
Yeah.
yeah, I mean, nobody wants to buy a business that's going to be flat forever. I mean, that's no fun. You want to buy something that you think you can improve it and, grow it over time and pursue new opportunities with it. And, but if you don't really have a plan, it's hard to do that. So,
Yes. Yes. That's for sure. That's for sure. God, Tom, it is just so interesting talking about this because you know, we talk, in business, you run a business, you might talk about customer satisfaction, you might have your metrics to talk about satisfaction, but you are likely not going at the level that you're going to be going into it, the customer, the market, the overall market, how are things moving, and globally even,
yeah.
and this day and age. So how much, when you're doing these things, typically how much is the global influence starting to play into the markets?
It depends on the industry. So, and the size of the business.
Yeah.
So, like the lower middle market, probably not so much
Yeah.
for the most part. Some of the bigger businesses that we deal with, that have global competition, there's, like medical products is a great
Oh
example.
yeah.
Devices.
That's true.
There's a lot of European companies that are looking to the U.S. to come in and, and become a real problem for some of the established U.S. companies. So you really
Wow.
need to understand what's happening, and that's, human intelligence comes into play in
Goes
that
back
to
in.
try to
Yeah.
figure out what exactly is happening.
Wow. Do people ever come to you just, I mean, not in an M&A transaction and go, hey, we just want to understand our customers better?
Yeah, we have, yep, that happens quite a bit. Yep.
Because I was just sitting here thinking, that would be valuable information no matter what, to be able to go out and look at the customer, the market, where, and just to try to, as you're running your business, to prepare or identify stuff that you might not see or know.
Yeah, no, 100%. Yeah, in fact, we did a lot of that. We kind of niched down. We were doing a lot of M&A stuff, but also some other stuff. But we're primarily doing M&A stuff, but we still do stuff for existing clients
Yeah.
that are not M&A related for the
Yeah.
exact reasons you say. Yeah.
Yeah. Yeah. Because it's a good thing to know every once in a while, I'm sure, if you can see how your customers, um, opinions are changing, market
Yep.
demands, just different things that are moving.
Absolutely. Yeah, it's critical. Yep.
That's a huge thing. Huh, cool. Well, if someone wants to reach out to you, Tom, what's the best way to get a hold of you?
Best way is to visit our website, which is just vedaintell.com, VEDAINTELL.com. And you can schedule an appointment there. You can, email us, anything. That's the best
Awesome.
way. Yeah.
Awesome. Well, Tom, it's been really interesting learning more about how you're doing commercial due diligence for M&A transactions, the process you use, the kind of things that you are doing when you're doing this, and the things you're discovering and how it helps both sellers when they're preparing their business for sale or getting ready for that sale, and how buyers use it to make smart decisions when they're buying a business.
Yep, it's critical. Yep.
Yeah, yeah. Well, thanks for being here today, Tom. I appreciate it. I want to say, if anyone, when you were listening, if you got in here late, go back to the beginning and start this over, because if you are in a business and you're considering a sale or purchasing a business, this could be one of the keys to really making that a good decision, or avoiding a bad decision, or just getting ready to go the right way. So go back to the beginning and start this over. Tom, thanks so much for being here today. Thanks for sharing your knowledge with us on this commercial due diligence for M&A transactions. We're going to close down right now, everyone. And Tom, hang out with me and we'll finish up offline.
All right. Thanks, Damon.